All right, welcome back. We're going to do another trade plan, this time in Blackstone in BX. And I'm going to do a little bit of fancy line work, but that's not the point of this post. I want to talk about a few other things. When it comes to learning about trading, finding the right path to begin with and committing to it is really the hardest part. I know I bounced around for years trying this method, that method, trying this way, fixing on a method back and forth. So finding the right path is the hardest part. And then committing to it without jumping around. Mostly we end up under the illusion that we need to find the proper method, right? The Holy Grail. That's the search for the Holy Grail. So what is the right path, right? We can talk about that a little bit. Well, it's the path of learning through consistency and discipline. It's the path of structuring ourselves as well as structuring a market and our methods. We need to go down a path of developing the mental framework for trading. Because no matter what new method you go to, you're always bringing you to the new method and whatever baggage you might have. So it's the path of becoming more conscious, more accountable, more responsible for everything we do. There's no victims in this. So we learn to structure things. So I'm going to show a little bit of line work, and then I want you to forget it. Okay? So, structuring a market, we've already done a few lessons on swings. Now, let me just say there's nothing special, there's nothing really good or bad about any of the tools that are used in technical analysis. They're just tools. The problem comes from the tools end up using the trader rather than the trader using the tools. That always ends up being the problem. Some kind of magic gets attributed to the tools, and they end up using you. So all I'm doing is marking out high, low, high. Now, if I take a median line set, high, low, high, this is a particular median line set. If I drew it from the low, it'd be a particular one, right? So they have distinctions. This particular one I call a pendulum. It's like a pendulum swinging. Or quite simply, it is what we can use just to measure pullbacks in a swing, right? If it comes about this far, that's the sweet spot for a pullback. It's just used to measure pullbacks, nice and simple. All right, so now we can take, since we've structured the swings, we can connect the highs to the low and actually do a projection. Nothing wrong with projection. It's extrapolating based on impulse and reaction legs. So we can do a projection here. And what this projection says is, all right, this is going to be known as, right, it's like a contraction. If it goes through, this can be an expansion. So here, let's just carry on with it. And this is an old setup I used to teach called X marks the spot. Now, if you want to throw a little bit of market structure, remember the swings and the shelves I talked about? It's just X marks the spot, meaning there's an X here. And it's just measuring reaction leg. Nothing special about median lines, right? It's just taking the A to B point and projecting it from C. It's projecting that leg. And then afterwards, we could say that this becomes, so now we'll be talking median line tools. This is what would be called a center line. And so when you have a center line, you then find an action line. and basically you double it out to get the reaction. It's called action reaction. Whoops. Somehow I ended up on net. Let's come back and find our lines again. There we go. So now we can take this and we call this a reaction line. Center, action, reaction, median line, and all it's doing is projecting the contraction for an expansion. And you can see it works pretty good. Works pretty good for the entry here and works pretty good for the target. Now, like I said, there's nothing special about these tools or any tools. The problem is they end up using you instead of you using them. And let me just say that while this looks kind of cool and it's not that hard to do in real time, it's pretty much useless because it ends up using traders. Tools are just there to describe a market. These are tools describing a swing. That's all they're doing. They're describing a swing through its paces, make a few projections, and then you deal with price and relation. Nothing special. So this is pretty much useless to traders to make it functional. What's needed, right, the path we need is to be able to take our methods and make them functional, right? Structure them to make them functional in a real-time environment. And this can be functional with the right mindset. But let me show you this same thing, and I can show you this all over the place. Not only that, this is one of my trades that has to do with contraction. I've talked about that. There's a whole different trade in here that has to do with expansion. And the key to any tools is you better know where you're measuring from. You better know market structure. So I can go center, right? Action, reaction. And that would be one entry and one exit. And you can see how this pretty much looks like a median line tool. All right, so now I want you to forget all that. Now take all of this. Let's see, how do I remove everything? It looked pretty, right? And it looks pretty when you do it in real time. Now here's where the real show begins. This is the real stuff. So let's come over here and put in our trade plan. This is where you begin to structure and implement risk control. You know exactly where your entry and your stop and everything else is going to be. Because you just can't trade pretty lines or pretty fibs or any of that stuff, right? You have to put a stop someplace, so you have to understand your risk. On top of that, I can make this also very objective by saying, okay, I'm going to enter here at the bottom shelf at the 25 line, and then I'm going to exit at 6 to 1. So now that is something that is impressive and is simple and built around what the tools are trying to show you. So that's where the juice is, structuring it all into something you're going to do, willing to take a stop, willing to take a series of trades. All right, so now let's take this puppy over to real time. It goes up, it goes down, we follow it. Right now it looks like it's going up. Now I can draw all the associated lines. I can draw lines that pick out entries and project this high and all that, but we don't need that. We need a structured approach to our trading. We need to understand what our tools, whatever tool you use, understand what your tools are trying to get across, and then make a structured plan. So let's get our plan ready. This is actually where the juice is, making this plan. Because this will begin to structure your mental framework. Right? That's what we're going to do. This will begin to structure your mental framework, which will fundamentally change how you see and experience markets and loss and everything else. And then you'd probably even get better at using your tools. We can do something really simple. Boom, I know exactly where I'm going to enter. So let's just fill it out, right? This is the good stuff, believe it or not. You can chase tools all your life. 119.54. And I know I'm going to take losses. I'm going to take more losses than I take wins, right? That's because I understand that in my mental environment. And that takes a while to learn. It doesn't come from listening about it or reading books. So let's calculate shares. And the way we're going to calculate shares is through the rest of the plan. And that is, this is how I do my documentation of my plan. I'll put it into a spreadsheet, put a date. Today is 2/18. You see we already have one that's still open, ready to go. Here we're talking BX. Going to go long. I know ahead of time where I'm going to enter. You notice there's no fear in this. And that's not because I'm special in any way. It's because of some training. That's all. Some training to change how you think about these things. So win or lose, training is more important than hopping around like a chicken with your head cut off about your entry and about what it might do and about what it should do and about what you hope it does. This is much more relaxing. So 107 shares, we know our size, and we can do a whole lot of trades and get stopped and not get dinged. And we're going for 6-1, so we don't need anything more than a 20% win rate to do okay here. So I'll fill this out, and this is going to be 107 shares, and our target is going to be 147.50. All right, so plan's made. Now we'll go and go through the steps of what the order might be. So I'm just going to use this risk reward tool to help me out. Create an order. I want to buy it 19.54. I want to put a stop 14.88. I want to put a target of, I only have it here, I didn't stretch it. But my target's going to be 147.50. It's going to be a limit order. Let's put this in force for a month. And I'll double check it. We need to set this to 500. That's 0.5%. That should be 107 shares. And then orders away. All right, so that's it. It's resting. It's planned ahead of time. Every aspect of it is baked in. No matter what method we learn to use, we want to bring accountability and responsibility to everything we do. That is the path to commit to. Okay? You know, the fancy line work, no big deal. I mean, we can replicate it again right here with just a little bit of understanding of market structure. Look. But again, I'm going to show it, and then I want you to forget it. Swing. So this is called structuring a market. Now, you might have indicators, and your indicators are basically trying to tell you something, right? It's trying to describe something about the market. So here you might notice that these are about the same size, huh? right? The reaction leg. So it's showing some kind of something in the market. Let's do the same exact thing we did last time. We'll put the pendulum median line in, meaning it's a pullback. So we'll start from the high, go to the low. And then when you get around the median line, this is where you begin to look. And then we can go ahead and throw our action reaction lines in. So I'm going to draw with purpose from specific points. I'm going high, to high. And I'm using action reaction lines in a little different way. This will be center, action, reaction. It's very much, and you can see there's another X marks the spot. Didn't quite come all the way down to the shelf, but there it is. You see these top lines, they just projected the reaction leg. The parallel lines, they projected reaction leg, price and time. And then this guy is projecting the overall expansion. And when you get real fancy with this, you'll realize there's ripples within ripples. So even among this line, there's a center and a reaction. All right. Now forget all that. And we'll just stick with our trade plan.